Okay, students of Finance 300. We're going to go through the assessment for week 3. Now, this one, some of you feel like is a little tricky, and I can understand that. So let me walk you through just some components of it. All right. So fundamentally, if we go back, let me go back to here. You're to complete the calculations in the spreadsheet. You're to modify, some of the pricing, but keep certain things the same, right? So they're saying, for example, uh, assume no change in day sales outstanding, right? So there are certain things you just don't do. Well, you need to keep static. But we'll go through this quick to see if maybe this will help out a little bit in how you get set up. All right. So the first thing you want to do is you want to put in all these calculations. Now, they didn't put these calculations in here for you, but I'm going to suggest that you want to do it up front so that you know exactly what's going on. Now, to make sure you get all these numbers right, what I would suggest first, and you can delete this later, is first take this, copy it, and bring it over here just to paste it, just so that you can always go back to something that is true, right? In case you mess up on your formulas. But for contribution margin, you're just going to take your revenue minus your direct expenses, right? So that should be pretty good. Voila, I got that right. Your operating expenses is just going to be the sum of these expenses, okay? Your interest expense, your tax expense, your net income is going to be your contribution margin minus your, well, let's do it differently. Sorry, I was not doing this right. Let's stop this so you can see how sometimes I will try to cruise through things quickly and forget my own self what I need to do. That sum is great because it's all these expenses, but we want to put in front of it the revenue minus the sum of all those things. Okay. Voila, we got the same number. Now, tax expense, interest expense, I don't think that's going to change because they don't mention anything about interest rate. No, no. So we're going to keep that the same, but you know what we want to do is see if we can match the tax expense. Now, what that should be is equal, let's say, we're going to take EBIT minus the interest, and we're going to times that by the tax rate. Now, do they have the tax rate down here? No, they don't. So we're going to impute the tax rate. Go the other way around. So tax rate is, let's come down here, tax rate equals, we're going to take that 3523 divided by, and do it this way, the EBIT minus the interest. Okay, that should give us the tax rate, 25%. Okay, but we'll leave that static right there. And so net income should be this EBIT minus the interest minus the tax expense. Voila, we got that. Now cash, accounts receivable. Some of these we might have to come back and, well, we won't come back and compute those. What we'll do is we'll impute the metrics down below, and then we'll use those to calculate the rest. But we got accounts receivable, inventory. Now we got total current assets. So let's sum that up. Okay, same number, perfect. Net fixed assets should be your property, plant, and equipment minus, well, not really minus because accumulated depreciation is already minus. We're just going to do a plus that. That gives us the net number, $77,000. And then total assets, we're just going to do, and I'll do this a little differently. I'll do sum of our total current and our net. Okay. So voila, 93,692. Our liabilities are going to be the sum of these two numbers. Okay, 12,303. We have our total liabilities, which I'll do this a little differently so people can see it differently as well. Take that plus that one. And then our common stock, our retained earnings, or our total equity, we're going to do that number plus that number. So total equity. So our total liabilities and equity should be, and I'll do this a little differently. I like to change things up a little bit. Okay. And voila. So we have all the numbers there. Now what's our contribution margin? Well, that's always a great idea. Calculate what our contribution margin is. So that's going to be right there, the 62,000 should be the same. So since it's already calculated, we're not going to have to really figure that out. Let's just pull it right there. Okay, our contribution margin, though, we will take that divided by our total revenue. Okay, 40.1%. Our total fixed cost is going to be, that one is going to be these fixed costs. We're going to call it, that is going to be the big question of the day, isn't it? What's our fixed cost? Our total fixed cost, oops, let's figure this out. Of course, let's see. It should be the combination of all these operating expenses. Okay, so let's go back there and see what we got here. Our total fixed cost equals sum, and we'll just do the sum of these items right here. Okay. 38,846. And then we've got taxable or operating income or our EBIT. I think we already calculated that, so let's just come up here. EBIT's right there. All right. And then our taxable income is going to be EBIT minus our interest expense, right? So it's 14,092 for an income tax rate. Now we could, instead of doing the calculation I did before, but it's right there anyway. That 25% is there. We can actually do this. Well, keep it the way it is. Yeah, just the formula. So our net income is going to be the same as what's right there. Okay, 10,569. Now, total assets, that's easy. We're just going to pull this up right there. And total liabilities is easy. That's right there. And total equity is easy. That's going to be right. Total equity right there. Okay. Return on sales. So return on sales, you can take your net income divided by your revenue. Okay. Your return on assets, same thing. Take your net income divided by assets. Okay. Your return on equity is going to be return on equity. Where's equity? Okay, there. Net income divided by equity. Our working capital. Now that's going to typically be the difference between your current assets and your current liabilities. So let's just equals your current assets minus your current liabilities. That's your working capital. 4,389.
So flat.
Okay. And now your working capital days.
Yeah.
This is always a curious one to me. I think of it in one way. Sometimes formulas think of it in another way. So you have to kind of piece it together. So we're going to take the working capital number and we're going to divide it by a daily revenue number. Okay. So you're going to take, let's say, take your working capital and divide it by, and I put parentheses around that so I can just kind of work inside. So I'm going to take the revenue number and divide it by 365. Okay. That's going to give me
Did he say
10.4 days. Perfect.
why?
Okay.
Here. These things.
Now your day sales outstanding, that's the same type of calculation, right? Because you're looking at how much accounts receivable is, how many days of revenue is in your accounts receivable. So the way to easily think about it is to go same calculation, right? Equals, we're going to take accounts receivable divided by, and then a number, oops, there it goes, a number, which is a daily revenue number. So your revenue divided by 365, okay? 8.8 days. Your DIO, days of inventory, same thing. Inventory right there, divided by, we're going to take the revenue, divided by 365. Okay, so that's 20. And your days purchasing, that's going to be your accounts payable. Oh, let's see. That's going to be your accounts payable divided by, we're going to do 3 and 4. So all your material purchases. So we're going to do equals your accounts payable divided by, and we're going to do two numbers. We're going to do parentheses, so we'll start like this. Okay, so we're going to do all your direct purchasing, 7 and 8 divided by 365. Okay, so that's the daily amount of purchasing that you're doing on an annual basis. So that gets you to your 3. Yep, there we go. Now leverage is going to be your equity, your assets divided by equity. Okay, so equals your assets divided by your equity. Okay, I can see the 1.4. Now, with that all, I think there's one thing left we have to do. Yes. Okay, so your units sold, we want to figure out the price first, right? So you're going to take your revenue divided by the number of units. Okay, so right now you're at 13,338. Now you can start to backload all this stuff, right? So you're going to take your 13,338 plus, and the easiest thing to do, well, I'm going to do it a couple sorry. So 5 B82, I'm going to fix that. So I'm going to press F4. It gives a dollar signs in front of the B, a dollar sign in front of the row 82. So it fixes that formula, that cell reference, and then I'm going to add to it the 55 cents. Well, that's not going to work because that's 55 cents in a tax value. That's silly. Okay, so I'm going to add to it 0.55. Okay, and I'm just going to copy this over, and instead of 55, I'm going to do 0.25. Right? Oh no, decreases, so it's a minus 0.25. Okay, so now I've got all the numbers that'll help drive this. So effectively, all you're doing, we're just changing material prices. Now, for the most part, and not material, the revenue. We're not changing cost of goods. These numbers should stay exactly the same. Okay. So I'm going to put over here what's not changing. Oh no, let me put down what is changing. Everything else stays the same. Now at this point, we don't need this anymore. Okay. But what's not changing? Now, what is changing? So changes. I'll just put it up here on top. This is going to change. Okay. Revenue is going to change. That's not going to change. Now, contribution margin is going to change because why? Revenue is changing. Depreciation is not changing. Marketing expense not changing. Rent expense not changing. Sales and general expenses not changing. The only thing here is operating profit is changing, EBIT, because why? Your revenue is changing. So, the one thing to note is just take this over in my wonderful way. I'm just going to do Control Enter. And now this formula has been populated all the way across. Same with here. F2, Control Enter. And F2, Control Enter. Right now, I've got all those formulas that I have right now here. And I also know that this is not going to change. Now, no, net income is going to change. This one, is going to change, okay? But if you take, instead of this non-formula right here, and you make it a formula, you're going to take your equals, you're going to take your EBIT minus your interest. Let's put parentheses around this, sorry. Put parentheses around this, and times it by your tax rate. Now, tax rate is right there. What I'm going to do is I'm going to go right here. Tax rate is going to stay exactly the same. So I'm just going to say these are all the same. Okay. All right. Brilliant. Now, theoretically, all these other things are going to change as they go. So if I just do my F2 control enter, and same with all this, all these metrics are going to happen exactly the same. Okay. Now you can do a copy paste or whatever of your formulas. I like to do it this way. It just kind of gets me in the habit of what I need to do, what I need to focus on. Okay. But all these other things, in fact, I'm going to show you another way of doing this. We're just going to come all the way down here, copy, and so I don't paste over stuff wrong, I'm going to do a paste formulas. So now I got all of that in there, so it'll automatically calculate for me. And so I know the taxes are going to change based on the income. Okay, so F2. And so now I've got formulas in here to calculate exactly what the tax expense should be. Okay. So at that point, all these other numbers are going to stay the same. I'm not going to do that. I'm going to let you guys figure that out. Now, accounts receivable, they said that all this other stuff is going to stay the same. Okay, so once again, I'm going to do this, F2, control enter. I'll just do these. Now, some of you smart folks will just copy and paste these numbers and then modify the formulas to do whatever. So you do you. I'm just showing you one way to go through this. Okay, I'm just copying over the formulas right now. Now, you know, the only other changes are going to be is right here, because cash is going to take up the difference in the margins. Okay, the retained earnings. Receivables, though, you're going to have to recalculate. Okay, now I'm not going to show you how to do this one because you're going to need to impute it based on the change in revenue. But remember, no matter what, this number, right, where'd it go? DSO. That number needs to say exactly the same, 8.8. Okay, there's a couple different ways of doing that, but I'm going to let you figure that out because you know the formula of how to calculate it. You just need to reverse engineer it to figure out what do you know. And well, I'll tell you what you know. You'll know what the let's see, that's the revenue. The revenue will change. This is the variable. B27 is the variable, receivables, right? So all you got to do is plug in the new revenue number or do a calculation to put in the new number, revenue number, in order to calculate the variable, which will be the or the unknown, which is the accounts receivable. Okay. In order to get you back, oops, in order to get you back to an 8.8, right, in these numbers, okay? But everything else is going to change. The only thing, okay, cash is going to change. Receivables is going to change. These other numbers, well, total current assets obviously will change. Plant and property, plant and equipment will not. Total assets will not. Accounts payable is not. Current debt is not changing. None of those numbers are changing. Okay. The only thing that's changing is this retained earnings and therefore your total equity. Okay. And you'll have a different asset value in the end. Those are the only places that things will change. Now, all these formulas will shift accordingly. Okay. But once the biggest part is figuring out how to calculate accounts receivable based on the changes in revenue and therefore revenue per day, right? So one way to think about it is, let's say that this number is one. let's make it easy. 175, okay? Let's say it's $175,000. Well, if you take 175 and divide it by 365, that's $479.45 per day, okay? And if I know I need to have 8.8 days, okay? This theoretically is, if I had that number, 4,219-ish would be my accounts receivable. All I'm doing is giving you a hint on how to do this. Now you can do this formulaically, right? I'll give you a hint. If you take the revenue per day and the revenue divided by 365 and times it by a magical number, call it, where did it go again? Right there. Now that magical number is divisible by 0, but here's the beauty. That's the formula. I know it's gonna make a circular reference. It's okay. Now all I gotta do is come down here. Instead of this being a formula, I make this be the number that's in B72, right? And I do the same thing, F2, oops, E plus that right there. Now I've got a fixed number. And so when I take this formula, wherever it was, if I take this formula and I copy and paste it right there, it's, whoops, I didn't want to do that because it changed the color. Let's do a formulas. Okay, so now I've got it in a way that the accounts receivable is matched. So then all you got to do is you got to fix your, theoretically, if you get this all right, all you got to do is make sure that you change the cash number. Write this in here so you guys change so that total assets equals total liabilities plus total equity. Okay. This is changed so that DSO what did I do there? DSO, days sales outstanding. Oh, AR equals DSO, days sales outstanding. Yes, that number 8.8, right? Times. No, it's revenue divided by DS. So I think that's how that formula is, right? Revenue. Yeah. I did it. Revenue divided by 365 times TSO. That's the formula. Okay. So that's one way of looking at it. So those are the ones that change, and everything else, because it's a formula, will shift as well. I have to put that as a shifter as well. Total assets. Okay. So hopefully that'll help you work through this. Feel free to shoot me an email if it's difficult for you and you need a little help. Talk to you later. Bye.